Hello, welcome to this week's FX on dollar CAD. Exchange normally last, let's put it on first. We had the end of the uptrend, the end of the previous week, and we've just drifted back down and we held the support at 132.09. The action's really a little bit elsewhere, so if we go back to the dollar index, we had a major end of the uptrend with those three diamonds and the arrow. However, all that it's done is go directly into the breakout point, which was at 99.09. What has to happen is we have to make a daily close below 98.48 in order to say that we're back in sideways. So a warning, enough to take some profits on longs, but no more than that. Not surprisingly, the euro dollar has done the inverse of that pretty much. Because we've been going sideways so long, those big blue crosses are bullwhip signals, but they're not either not a support, so we're not interested in them, and B, because we've been going sideways so long, the time average bands, which that code is based around, were very, very tight. So if I just show you that, I can just put the time average bands on, very, very close together, so it doesn't take much to actually give you a signal. What has to happen is we have to make a daily close above 109.10, and then it would say, okay, we're back in sideways. Across the cable, a positive signal on Friday, but not at support, so pretty quiet really. We'll have a quick look at the euro pound because that had been interesting. And on the spot terms, it did not reach its final support, which you can see down there at 82.39. However, if you do the futures, it was a different story. So it's important quite often just to compare the two. And on the futures, we did hit the final level and got the reversal signal. So no reason to be short at the moment. Aggressive you can be long because the stop is very, very easy. Dollar yen had a very big week, so a massive move up on Wednesday. A pullback on Friday, which is to do with the stock market weakness, but it's definitely in breakout mode, and we have been for some time really. We've been way above that monthly level. I'm just going to explain why it suddenly did that, and it's to do with Ichimoku, Japanese study, and it's on a weekly chart. And what happened is the cloud went positive. Now every single Japanese trader has got this chart on their screen. It's the ultimate in crowd following. Away we go. So the other thing that happened was we were above the cloud on the current price. We actually held the top of the cloud pretty much to the tick. Bang, away you go. So that is the reason for the strength. Just a reminder for those who haven't followed me for a long time, Ichimoku is only of use on Japanese markets. Do not put it on anything else. Across the Aussie also had plenty going on. Have one of my favourite signals, which is divergence as a continuation, which sounds like a bit of a NEMA, but very powerful for me, and it was breaking down. So it went through final support there, accelerated down, hit 3 down on Thursday, partial profit taking point. It's got to get back above 67.00 on a closing basis to say that the forces break, but the Aussie in trouble. Similar story on Kiwi, but we had a signal, but it was coming into that final support. We did actually finally break it on Thursday, but of the two to trade, the Aussie was far more powerful. Okay, so we'll leave it at that. Okay.